keep financial repression going, keep the cycle going until productivity increased. And eventually productivity increased, financial repression helped to wear down the debts. And over time, the economy took off and we had the 50s and the 60s and then into the 70s. And that was a magic period for GDP growth because of what they did. And they're repeating it now. It's very clear to me that that is the game. That is the game the Japanese are playing, the game the Europeans are playing. Everybody's playing the same game. So we know the game. We know debasement of currency is the other game. So here we know that if we don't play their game, you're going to get fucked. If you invest in assets that don't beat the balance sheets, the 15% a year, you're going to be losing money every year.
Wait a minute, everyone. We all agree that the crypto market never sleeps, but with countless newsletters out there, how do you choose the best one for you? Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In today's video, Raoul digs into the charts to explain our current economic reality and how it's all shaped by debt, demographics, and deflation. But don't worry, it's not all doom and gloom. As Raoul explains, the next 6 years might explain how we can all save our futures. So without wasting any time, let's dive into the video.
So it's really important that that is your hurdle rate. And when you look at that, you suddenly realize that most assets don't beat it. The S&P doesn't really beat it. Gold certainly doesn't. Real estate unlevered doesn't. Most things don't beat that debasement. So if you invest in other things, you're going to lose money. And that's a hard lesson for people to learn. Most people don't understand this simple fact, is you are getting poorer by investing in these things. And that was the big realization that got to me. It's like, oh my God, my whole macro world has been turned upside down. Because everything we thought was the investable asset became the non-investable asset. And everything we thought was non-investable because it was riskier became the asset. Because when you look at everything versus the Fed balance sheet as a simple example, there's only two assets that have gone up. And I've talked about this at length before. It's technology and it's crypto. So those are the things that we have. So that's why I've become so passionate about them. And really, it's crypto because it kills technology investing too. Technology investing is basically a way of being engaged in the economy, and we'll talk a bit about what that means, understanding the changes around us. So it's kind of important to invest in it, but really the entire wealth is going to get made in one asset class. And I know a bunch of you can't stand it. I don't care. I'm trying to help you. And if you're not helping yourself, I just don't know what to do. I've gone on and on and on for over 10 years in Real Vision about this. Since I first started talking about Bitcoin, it's up 450,000%. Now, most people just still don't get why I care about this. It's because it's the only way I see to truly give yourself the opportunity. And this is, you can see this behavior of investing in risky things by the speculative economy that has taken hold that people can't understand. It makes total sense to me. If your future is fucked because you're young, you are going to do what you're supposed to do, buy your 401k, that kind of locks it in because it's not underperforming the balance sheet, it's not outperforming. So that's savings. Okay, I get that. And it's better than saving in cash. But everybody knows they can't get ahead. So people have become speculative. Speculative is okay if it's not at the casino. If it's in a secular trending market like crypto technology, go for it. Just do it in the right way.
Holding firm to the die-hard Bitcoin maximalism of its leadership, Michael Saylor's MicroStrategy has doubled down yet again on the world's premier cryptocurrency, upsizing its latest convertible debt offering by $200 million from an original plan of $500 million to purchase more BTC. In a Friday press release, Tyson's Corner, Virginia-based software company MicroStrategy, announced that it had raised its debt offering to $700 million from $500 million to buy more Bitcoin. The unsecured notes, which will be sold in a private offering to qualified institutional buyers under Rule 144(a) of the Securities Act of 1933, are set to mature in June 2032. MicroStrategy allowed initial buyers to buy an additional $100 million of notes within 13 days of the first issuance. The June 14 announcement said the offering will be closed on Monday. The company intends to use the debt issuance proceeds to continue adding more Bitcoin to its corporate treasury and for general corporate affairs. MicroStrategy first bought BTC for its treasury in 2020. Now it holds 214,400 BTC worth a whopping $14 billion, making the company the largest publicly traded HODLer of the world's oldest and largest cryptocurrency. Suffice it to say that MicroStrategy easily controls over 1% of Bitcoin's total supply, which is capped at 21 million BTC. While that would suggest a stunning profit of over $4 billion if liquidated, Saylor has frequently stressed that he has no intention of selling off MicroStrategy's gargantuan Bitcoin stash anytime soon. MicroStrategy's upsizing of its debt offering from $500 million to $700 million aligns with the Bitcoin Maxi company's strategy to boost its BTC holdings and position in the crypto market. Meanwhile, the price of the benchmark crypto remains stuck in a post-halving reaccumulation range, which could go on for 3 more months, as per popular crypto strategist Rekt Capital. In a June 13 post on the X social media platform, the pseudonymous analyst opined, "This cycle has been filled with reaccumulation ranges, which inevitably break to the upside over time." After the Bitcoin halving in 2020, consolidation lasted for 20 days before the alpha crypto rocketed, ultimately hitting the previous all-time high of $69,000 in November 2021. There was a 48-day consolidation phase in 2017. Bitcoin has plunged to $66,221 as of press time, its weakest price in 4 weeks. The OG crypto was down 5.5% over the past 7 days. Months from now, you won't remember this pullback. Nobody will remember this reaccumulation period. But everybody will remember the parabolic phase that comes afterward, Rekt Capital added.
So people are taking bets, but in a secular market, actually pretty intelligent risk-taking. And options are pretty intelligent too. Over time, if you get it right, you have the right tools, you learn how to invest. It's one of the core things that we do at Real Vision is try and teach people how to do this. You can make money. Crypto has been even easier because the sheer magnitude of the moves means you just buy and hold it. You just own the highest quality assets and do nothing. I mean, doing nothing is really that easy. Has been basically giving you about 100% a year returns for the last 7 years, 8 years. It's actually higher if you go back earlier in Bitcoin's time. But if you basically look at that, you're going to get somewhere between 80 and 200% returns, depending where you are on the cycle over time. So these are the compounded returns. These aren't just, year in, because obviously some years you're like 500% returns and other times you'll make down 70%. People don't get their heads around, but this is actually the best risk-adjusted reward asset of all time. Fidelity have this beautiful chart of all of these dot plots of risk-adjusted rewards of assets. And there's tech is quite high and, some markets are high, and then cyclical stuff like oil and stuff is low risk-adjusted returns over time. It doesn't really do anything. All of this, S&P, all in this. And then you go and there's a blank paper, and somewhere right at the top is a dot that says Bitcoin. It's a fucking alien. We have never been given an asset like crypto that has this risk reward by any yardstick. Drawdown versus, drawdown risk, volatility adjusted, any way you want to look at this asset, as long as it's over a period of time, it's by far and away the best asset we've ever been given. It's also the best performing asset of all time and remains the best performing asset. Every 4 years of that everything code cycle, Crypto Spring, which was last year, best performing asset in the world. Crypto Summer, this year will be the best performing asset in the world. Crypto fall next year will be the best performing asset in the world. Crypto winter, which is 2026, will be the worst performing asset in the world. It's kind of simple. You don't need to do anything. You just need to buy it and hold it.
The legal battle between the SEC and Ripple Labs over XRP sales as unregistered securities took a significant turn on June 14, 2024. A legal document shared by defense lawyer James Fillon revealed a substantial reduction in the SEC's proposed settlement amount for Ripple. The initial SEC proposal sought a hefty $2 billion penalty from Ripple. However, the new filing proposes a significantly reduced settlement sum of $102.6 million. This development comes just a day after Ripple filed a legal brief arguing that the original $2 billion penalty was unreasonable. In its argument, Ripple pointed to the recent Terraform Labs case and past SEC settlements as a basis for a fairer settlement amount. Terraform Labs, the company behind the Luna cryptocurrency, reached a settlement with the SEC for $4.4 billion on June 13. Ripple argued that the SEC typically seeks penalties between 0.6% and 1.8% of the defendant's revenue in such cases, and proposed a settlement of only $10 million. The SEC, however, rejected Ripple's comparison, claiming it was irrelevant to their case. According to the SEC filing, Ripple fails to acknowledge the significant differences between their case and Terraform Labs. Unlike Ripple, Terraform Labs is demonstrably out of business and has agreed to burn all their crypto asset securities, return funds to investors, and remove key personnel involved in the violations. The SEC emphasized that these factors heavily influence their settlement offer with Terraform Labs and are not applicable to Ripple's case. They added, "Ripple is agreeing to none of this relief. In fact, Ripple is agreeing to nothing." And do not forget to subscribe to Bitcoin Zella. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you liked the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.